All right, let's talk about the absolute most important barrier between a sudden medical emergency and, well, complete financial ruin. We're talking about health insurance. In this explainer, we're completely skipping the dry policy jargon. Instead, we're going to look at the raw, tangible value of coverage. You know, we so often hear about healthcare in the abstract, but fundamentally, this topic is grounded in something incredibly real: your wealth preservation and your family's future. Our goal today is to map out exactly how the unpredictable chaos of our health connects to the very predictable need to protect your assets. We're going to break down the anatomy of medical emergencies, the hidden leverage of everyday care, and the strategic steps you can take to shield yourself from a catastrophic loss. So let's dive right in and see why this matters so much. So picture this. You wake up on a completely random Tuesday, grab your morning coffee, and bam, a medical emergency just derails absolutely everything. It's a pretty jarring thought, right? You're just going about your normal routine, and literally in the blink of an eye, the entire trajectory of your week, your month, or even your year completely changes. Now, the stress of this kind of situation is already overwhelming on its own. You're worried about recovery, you're dealing with pain, or maybe you're deeply concerned about the well-being of someone you love. But here's the thing. That emotional and physical stress, it's really only the first half of the equation when the unexpected strikes. Because right after that initial shock wears off, a secondary crisis is waiting right in the wings. Because what happens next is that the initial shock of a diagnosis is quickly followed by an equally terrifying reality, which is the billing cycle. We are talking about the compounding nature of sudden medical expenses. It's not just the cost of a hospital bed, it's the room, the surgical team, the highly specialized medications, and the emergency transit, all hitting your ledger at exactly the same time. Each of these represents a distinct and frankly massive line item. When you're in the middle of a health crisis, the absolute last thing you should have to calculate is the hourly rate of the life-saving care you're receiving. But without a safety net, those costs pile up relentlessly. It's like a financial sinkhole opening up right under your feet.
And look, we aren't just talking about losing a couple $100 here or making some minor tweak to your monthly budget. No way. We are talking about instant multi-thousand-dollar liabilities just materializing overnight. That is a heavy, brutal number for anyone to absorb out of nowhere. To put that into perspective, when you take those hospital stays, add the surgeries, stack the medications on top, and include the baseline emergency treatments, that number skyrockets incredibly fast. It is a sudden, aggressive evaporation of capital that can literally wipe out years of disciplined saving in a matter of days. It forces us to confront just how quickly wealth can vanish if you don't have a proper barrier in place.
So here is the critical distinction. A medical issue is obviously a biological problem. But an uninsured medical issue? That morphs into a generational financial problem. If you're forced to liquidate your accounts to pay those thousands of dollars we just talked about, you aren't merely paying for a surgery. You are actively trading away your family's future stability. You're compromising your retirement, your kids' education fund, or your hard-earned security, all because of a completely unpredictable event. That is where the true gravity of an uninsured emergency lies. It takes a health hurdle and transforms it into a permanent, serious burden on your finances and your family's future. But here is exactly where the whole dynamic flips. Health insurance is fundamentally an instrument of risk transfer. It's the barrier that absorbs that financial shockwave, allowing you to focus entirely on recovery rather than, bankruptcy. On one side of the equation, you have the terrifying prospect of bearing the full weight of paying out of pocket for those massive liabilities all by yourself. But on the other side, you have a system stepping in to bridge the gap. Coverage gives you access to quality care and guaranteed financial protection without that paralyzing fear. It ensures that when it matters most, the medical system works to heal you, while your policy works to protect your assets.
Now, a lot of people treat insurance like a fire extinguisher, right? Like it's just something you only use when the house is literally burning down. But honestly, that misses half of its value. The real leverage comes from everyday, proactive maintenance. Coverage actually helps you stay healthy and catch problems early through routine checkups, preventative care, diagnostic tests, and ongoing treatments. By actually using these everyday health benefits, you are actively managing your health portfolio. You're getting those diagnostic tests that catch a minor issue way before it evolves into a multi-thousand-dollar emergency. It's an active, daily tool for optimization, rather than just a passive safety net waiting for a disaster.
Which brings us to a quote that really hits the nail on the head. Life is unpredictable, but your financial security doesn't have to be. I mean, we can't control biology, we can't control physics, and we absolutely cannot predict when an accident might happen. The unpredictability of life is just a given, but we can totally control our financial readiness for those exact moments.
We have the power to completely decouple our financial stability from our physical fragility. By putting the right safeguards in place, the unpredictable chaos of life simply doesn't get to dictate our economic future.
So getting coverage is basically locking in a 3-part defense system. Step 1, you ring-fence your hard-earned savings. Those thousands of dollars you've tucked away, they stay yours. Step 2, you protect your family. You make for sure that your loved ones aren't quietly inheriting a mountain of medical debt and dealing with the fallout. And step 3, you secure the ultimate luxury, which is waking up with absolute peace of mind for tomorrow. It is a highly logical progression, moving from immediate financial defense straight into long-term emotional comfort. You know that if the unpredictable happens tomorrow, the financial guardrails are already installed.
The absolute biggest takeaway here is the sheer danger of delay. Waiting for a disaster to strike before looking for a shield is a losing game. I mean, it's way too late to build a storm shelter when the hurricane is already tearing the roof off. The smartest move, actually, scratch that, the only logical move from an asset protection standpoint is establishing that safety net today, before the storm hits. A healthy future fundamentally starts with getting the right protection in place right now. It's about taking back control from the unpredictable nature of life before it forces your hand.
We've walked through the compounding costs of emergencies, the strategic leverage of preventative care, and the profound difference between out-of-pocket ruin and insured risk transfer. So as we wrap up this explainer, I really want you to ask yourself a tough question. If the unpredictable happened tomorrow, is your financial firewall ready to hold? Take a hard look at your safety net today, because true peace of mind is knowing exactly what happens next. Are you truly prepared for the unpredictable?